Hi, everybody. Last week, I went over the different markets here in Lynchburg, Virginia, and I talked a little bit about how the high end of the market is going to see a little bit more price reductions than the low end. And what I wanted to do is I looked at the past 14 days just to see like, okay, what's happening here in Lynchburg, Virginia? And I wanted to share that with you. So this is kind of an update of the dual market that we see here in Lynchburg, Virginia. So give me just a second and I'm going to share my screen here. Give me just a moment. I got to figure out. Okay, so this is where I'm going to go here first. So the first thing that I did is I looked on Redfin where it shows the price reductions of the houses that are on the market, and I chose the past 14 days. And you can see here that what if we looked at it last week, I think the median was $230,000. And if we look at the market, a lot of these homes are above that median, just like we talked about last week, where there's two markets above the median and below. And here we can see that a lot of those, so if I were to draw it out here, a lot of these houses right here are above 230, except for this guy. But we're going to talk about that guy in a minute. So, because the reason why I say that is because when we look at these guys, oh, that's not a good color on a green background. Let's do purple. When we look at these guys here, we see a lot below, right, the 230 mark, 230 negative. So what I did is I said, let me look into that market a little bit deeper. And let me show you my thought process here, right? If this is the full market, right, and we have over here a 1.15 million, and I know for a fact that we have a 45,000 property on the low end of the market. If this is the full market right here, and the exact middle is 230, right, what tends to happen is we have a city that's broken up into different markets, right? This one will be 600K, this one will be 400K, this one will be 200K, and this one will be 800K, right? And it's based on different characteristics within the market. There might be like a river over here, right? Which is why you have the riverfront properties, which make up the bulk of this amount. And then as you get back away from the river, you have the other amounts. And what happens is within these markets, like let's say this 600K market, 600K is in the middle, right? So let's say we have 2 million on the river and we have, let's say, I don't know, 400K right here on this end. And then that bleeds into the 400K area, right? And then it's 300 and 200. And maybe there is a park over here, right? That's giving you the 400K in this area. And then as you get further away from the park, you see something like 300 and then 200, which then bleeds into this area right here, right? And then let's say this is like the railroad station over here, right? As I have a railroad behind my house that's going through right now. So if you hear that, I apologize. But this is my thought process of how the markets are divided up. So what I said when I looked at this here is I said, okay, there is a huge amount of homes right here that are under the median, under 230. What's up with that? So I said, let's separate the market again. Let's find below 230 what's going on in that particular area. So I took this now and I turned this into the new full market. So, I mean, I didn't do it by price. I did it by location. So, but what does this market look like? Because the $1 million home will not fall into this. So that's where this little drawing comes in. I said, let me look at just the properties kind of down in that area where we're seeing those that are below the 230 amount. Does this above the median price drops still hold? That was my question after I did that. So I'm going to stop sharing my screen here because I'm going to share a spreadsheet. Because what I did is I found all that data on Redfin, I downloaded the data, and then now I took a little bit more analysis into it. So let's take a look at that now. Give me just a moment to pull it up. All right. So what I did is I pulled it up here, and you can see on the bottom here, I have DT, all I just called it downtown, all selected in price drops. And what I did is I looked at the data and I was looking at it, and Blackwater Run had a significant amount of homes in that area. And you can see here that those homes are generally $500,000 or more. There's a couple there that are below $500,000. And they are generally new. You can see the year built 2023. So what I said was, okay, we need to get rid of those properties in order to identify this neighborhood properly. So I removed those and I came up with this list here. And this list, it still has some properties like this one on Rivermont Ave that is significantly higher than the lowest end property, which is 34,000. So I took a look at them and I said, what is the average home price and what is the median? And then I also said, let's get rid of the outliers. So I took the top two away and the top and the bottom two away. And so let's get rid of those tails and let's look at just the meat of the market. And you can see here that I got the same median and that I have a lower average because I got rid of those two higher end homes. This is a sidebar. This is why we use median generally instead of average home price, because generally, I don't know if I can draw on Excel, I can. Generally, if you have the high-end homes here, like a 650K and a 34K, right? This is going to hold more weight on the average, which will shuffle upwards, right? So when you get rid of two high-end homes and two low-end homes, the average will shift downwards. The reason why we use median home price is because it is the exact middle. It doesn't matter what's up here. It could be a $20 million home and it could be a $1 home. The middle will still be the same no matter what market's in. That's why we use median. Just so you guys know, I'm not sure if you knew that. But back to the two different markets here in Lynchburg. So my idea was, okay, let's look at this market and see, is the 230 median of the entire market overshooting this particular market? So let's take a look and see what we came up with. It does show that the median here is 1/3, where there is 170, that's about what, $60,000 below the average median in Lynchburg proper. So let's see how but let's go back to the 230 number and let's take a look and see what we have. So what I did is I grabbed all of the price drops in the area and I just used a simple Excel formula to figure out, okay, was this home on the list that I showed you earlier? And it showed that there was 1, 2, 3, 4, 5, 6 homes that have price drops that are on that map in that area. So of all of the homes in that area, there are that we looked at, there are 27 homes in the area and 6 of them had price drops. So were they above or below the median? So what I did is I looked at the average price of the homes that were dropping price, and their average is about 244, which is above the median. But if we're looking at median to median, we have to compare apples to apples. So the average is above, which is fine, but that doesn't necessarily tell the story because the median is actually below. It is below the 230 number. So on its surface, it looks as if the assumption that I make about the median being above the median, having more price drops than the below the median, it does not hold on the surface. So I said, okay, let me look into this a little bit longer. So what I did is I looked at all of the homes that we just selected on this chart here, right? I just brought over these averages and I said, let's look at hold on. I cannot, let me move this over here. Okay, there we go. Let's look at the total number of homes here that are above the 230 median. And we have just 2. But when we shrink the market from full Lynchburg, right? So if I were to come over here and I were to say, this is the full, oh, here we go. This is the full market of Lynchburg, right? So $1 million homes here, 34K homes here, right? If we were to just look at that one market location-wise, what would that look like? So what we did is we found out that this here is the, this right here is the average price of those homes, and it's the median. But when we break it out even further and we say, okay, well, what is the median of this location here within all of the homes, right? Within all of these price points, what is the median? So what I did is I found down here that the median is 172, 400 for this market, not for the entire Lynchburg market, but for this market here. And what I found was that we didn't have a 172. So what it did is it said, okay, at this point is where 172 would be. So that means 50% of the homes are here and 50% of the homes are here. So this is where my data analytics background comes into play. I said there's 2 markets here in Lynchburg, and above the 230, you're going to see a market that is going to have increased price drops because not many people are going to be purchasing those homes. But when you take the full market and divide it up into submarkets, does that still hold true? Well, if we look at this now, we can see that there are 2 homes that have dropped prices below the market, but there are 1, 2, 3, 4 homes that have dropped prices above the market. So does that hold true? Yes, because there are 2 times as many homes above the median that have dropped prices than those below the median. Now, can I take a look at all these homes here, or can I take a look at these 2 homes here and see what geographic market they play a role in and what priced market they play a role in, and would they be above 50% of that price level? I don't know. If you guys want to do it, please do it and let me know. But as it stands, when I looked deep into the market, I was able to see that yes, it still stands that there are 2 markets no matter where you are. Why does that stand? Because generally, these homes here are going to be your starters and possibly move-ups. Now, not for everybody, but generally that's how it works in a market. And these are going to be your move-ups and your luxury. And what's happening is in this area right here, right? This is where the people have those sub 3, sub 4% mortgages. They are not buying on this end and they are not selling on this end. So what happens is these prices are generally going to stay relative to list. Oh, to list. Whereas these ones are going to see drops because there's nobody who wants to buy these homes because they're not moving out of their homes that they can add to this market. And if they add more to this market, it's going to allow these to be more competitive, which unfortunately at this point they are not. I know this was a long video. I do appreciate you watching. Go ahead and just do a thumbs up if you can, and let me know how I'm doing, guys. I am trying to continue to do this while I'm in school, but I just want to make sure that you guys are making the right choices out there as investors. Generally, I use cash on cash return, and that's how I purchase my investments. So let me know how I'm doing, and you guys have a great day.